All right, it's 7:22 on Yarona FM. Live the music. Joined in studio by Kagiso Mochabaki from Bifira. He is the head the fintech department Go. And we are talking virtual assets. We've been doing that over the past couple of weeks. But before we get into that, Kagiso, just give a recap for us, for someone who's maybe tuning in for the very first time, what Bifira does.
Basically Bifira re okametse ba re reng ba gweba ka tsamadi. We were talking about financial institutions that are non-bank, right? We're talking about regulation of insurance companies, regulation of micro lenders, asset managers, and the one we're here for today, virtual asset service providers. Later, the pension, in the regulation of pension funds is done by Bifira. Then in terms of the goals and main objectives with regards to our regulation or supervision, to make sure there is market integrity. We don't want situations where you have unethical practices and all that in the market. You want to maintain financial stability and so forth.
Awesome stuff. Yeah. And as I've already mentioned, we've been talking about virtual assets, what they are and why it's important for me to know about them, for the public to know about them. Just a recap of what virtual assets are there, Kagiso.
In short, really, virtual assets are digital representations of value. How to break it down really, virtually means something that only exists digitally. A physical form of Bitcoin, in a similar sense, a physical form of pula, right? And asset meaning simply something you can own. So that's what virtual assets are. Digital money or digital representations of your pula are not virtual assets, right?
All right.
Yeah.
All right. Now, why should I be aware of them?
Because they are there and they're here to stay. I think when they first came in, a lot of people thought, this is just a fad, it's going to go away eventually. But there's growing use, growing adoption of virtual assets to a point where even whole governments, whole countries are looking to issue what's called a central bank digital coin, inspired by these virtual assets. So you need to know about them because they are here and at some point you're going to have to interact with them.
We have this thing as people where house boniselo, in the physical form, there's a lot of apprehension, you know what I mean? So I think going and opening this conversation about frauds and scams and the concerns that probably exist in the virtual asset space, what are some of those common scams and how can one protect themselves?
I think before we get to the scams, we'll talk about the main risks associated with virtual assets.
Absolutely.
And why the public should be aware of them. One thing we mentioned, there was a type of virtual asset, the unbacked virtual assets. Really, there are different types. When I say more an underlying asset. It could be a cryptocurrency, it's pegged one to one with the pula. It could be pegged to a commodity like gold and things like that. Those tend to maintain price stability. But the ones that say Bitcoin, there is no underlying asset from which it derives its value. Market forces. So
it's volatile, ne?
Those ones are the ones that are extremely volatile. So one of the major risks that people need to understand with regards to cryptocurrencies is price volatility. So the value of a virtual asset can skyrocket overnight, but also can crash just as quickly. A particular virtual asset 1,000 pula today. 2 days later, I check a spatch worth 200. Those are the kind of price swings we talk about.
How do I manage that risk of the volatility then, Kagiso?
The best, and this is not financial advice.
Yeah.
But in any type of investment you try to get into, you try to diversify.
Yeah.
Right. So you cannot put all your baskets into an extremely volatile asset. unless you are speculative and it's money you're willing to lose. But if you're trying to preserve some kind of wealth, I'd say mix it up with regards to the basket of assets you're looking into. Have some stable coins in there, have these volatile ones where you're willing to speculate as limited to a certain exposure.
Awesome stuff.
Yeah.
It's 7:28 on Yarona FM. Left the music in conversation with Kagiso Mochabaki from Bifira. He's the head of the fintech department, and we are talking virtual assets and why you should be aware of them. He just touched on the volatility, which is one of the key characteristics of virtual assets, and how you can manage this risks as a user. Now, when we come back just after news headlines, we will get into that conversations about the fraud, scams, and how one can protect themselves. Tato comes through with news headlines in a bit. The Rush with MOG, FOX, as well as Tato. It's 7:32. Continuing our conversation with Kagiso Mochabaki from Bifira. He's the head of the fintech department, and we are talking about virtual assets and why you should be aware of them. And before we took a break, we said we wanted to talk about the frauds and scams associated with the virtual asset space. But before we even get into that, we touched on some of the characteristics of virtual assets. And one thing we talked about was the market volatility.
The price volatility.
Right?
Yeah.
And how you can manage those risks. Let's get into some of the other risks there, Kagiso.
I think if we can link to the previous session where we said Ari today, that's where now the next risk comes in, the fraudulent scam, right? Scammers prey on excitement and lack of knowledge. So because people are not taking the time to educate themselves, a lot of these schemes then come up saying you are promised returns and people fall prey to these things. So that's one of the risks that's now become prevalent in the market, right?
Right.
Another one is hacking and theft. Since virtual assets are digital, cyber criminals constantly try to steal them through different forms of attacks, to be phishing attacks, malware, or by hacking weakly secured platforms. So enable phishing, we'll get into it. But basically, it's you're getting an email or a message saying, no, your login details, is something wrong. Can you provide A, B, C, D? Yeah.
And then I think maybe it ties to what we've talked about before in terms of what's the word? You need to deal with whatever business you're doing with virtual assets, with people that are regulated, so that if anything goes
100%.
wrong. Right,
100%, and I think one of the other characteristics that we really need to talk about is that in the traditional banking system, oka dira o romella munga madi o realize I made a mistake, I meant to send to ehelanga 7 esenga 6.
Yes.
And then they can help reverse those funds or return those funds. Most virtual asset transactions are irreversible. Once your assets are gone, they're gone.
Yo.
So you need to be now extra careful with the wallet addresses that you use and everything. Make sure it's the right address for whoever you want to share your assets with.
Okay.
Yeah.
I believe now we can now expand on the fraud and scams that come or are concerned with the virtual asset space.
This one is a common scam, really, not just crypto related in our country. Ponzi and pyramid schemes. We promise you ridiculously high returns, but essentially what's happening is new investors' money is used to pay the older investors. But eventually the system crumbles because they bite off more than they can chew. So in essence, what we tell a lot of, there's not even any kind of crypto involved. People might promise you that, listen, you invest in this, we buy crypto for you, the return, you're going to get ridiculous amounts. But when you look at it, there's actually no crypto. People are just revolving money and, keeping a bit for themselves as well. Yeah.
So the Ponzi scheme.
Listen, I want to be very clear. It's not to say high returns cannot be realized in the crypto market. We talked about the volatility thing, which gives people a potential just as much as they can to lose a lot, but they can gain a lot.
Right.
But consistent, guaranteed high returns. If it sounds too good to be true, it most probably is.
It probably is, I guess.
Most probably is.
Okay.
Yeah.
All right. And then what are the other ones associated with the space?
We have about 3 more that I want to talk about. The next one is fake investment platforms, right? Quite similar to the first one, but you'll see these little pop-ups or whatever flashy websites that come in claiming invest 500 pula today, get 10,000 by the end of the week. These platforms are almost always scams designed to trick people into depositing money to never be seen again. We have one we issued a notice on. I'm not sure if I can say the name, but it was a supposed crypto trading platform, and people put in money. Then the next thing the platform upgrade a system, so we're moving your money elsewhere.
This is in Botswana.
It's apparently it's Chinese based,
yeah,
but it was happening to Botswana. You know, you'd have people come in saying, can I say it's 100,000? They may not access again say $50 or more, and there was just the stories were endless. But the reality was that you would never see your money again. Yeah. So back to licensed entities.
Licensed entities. So that there's that word.
The recourse.
Recourse.
Yes.
Right.
And then the next one, it's it's called pump and dump schemes, right? So essentially, you remember we gave the example Yarona FM deciding, you know what, we want to raise funds and
we're going to start a Fox coin.
Yes, and expand this.
Yeah.
So we're starting a Fox coin. And then what Fox and his friends do is that they say, okay, we talked about what price, demand delay. Guys, we're going to go heavy on this coin. We're going to buy the Fox coin ridiculously so that it seems like the demand for it is high.
Right.
And people banale FOMO, you know. If there seems like there's a wave, a particular coin that's growing, a lot of people then buy into it. This then drives the price high. They start dumping the coin, they start selling it off. So now the price then drops for but
right.
for someone else who is reguling much later, I get to lose out because all that liquidity is drawn out. You guys cash in, and nothing is left in terms of value to that particular coin.
Yeah.
So these are known as the pump and dump. It's similar to the next one that we're going to talk about. It's called the rug pull. But in this particular sense, I'll use another example here. Okay, we're issuing a wire coin. The underlying value at the Yarona FM, the brand and its assets and all these things, the revenue, right? We're issuing it because we want to build the project up. People then buy into that, knowing what that's the value of the token. It's Yarona FM.
The brand is
the
powerful.
Brand and everything.
Yeah.
The owner those funds they raise from that wire coin, they disappear and everything. All of a sudden, you are left with a token any kind of value. So essentially, they use the token to raise funds for the particular project, but it then withdrew all the funds, and people are left with basically nothing. There was a very infamous one year Squid Game token, which rose to about, I think at its height, $2,800 per token. But then it plummeted all the way to zero because what the investors had promised was not what the coin could do.
And they were just leveraging on the brand, Squid.
Exactly. It was just after the first season came out. There was a lot of hype about it. They said, listen, when you buy this token, you can participate in future online Squid Game, whatever. You can exchange this for other tokens. And people found, once we're regular, you can't do anything with it. Yeah.
So, guys, we've talked about all these risks. So does it all go back to educating, and knowing who is regulated, who's not regulated, in a way of protecting yourself?
It does. And the last kind of scam I want to talk about, Q&A phishing. And the reason it's important to with regards to what you said is that in this particular sense, you need to understand how legitimate entities work, legitimate exchanges work. In a similar way that your bank will tell you, we'll never call you and say, PIN ATM, a lot of knowledge and education about how these work will go a long way. So phishing attacks, hackers send fake emails, or they message you on Facebook, no, we are from this particular exchange, we want to fix certain things about your account, but we need your login details and things like that. You give them those, your assets are gone. So those are some of the things. It still goes back to education. It goes back to saying, let me actually, we can give a few tips on how people can stay safe. Always research before investing. If a project or platform isn't licensed by NBFIRA, be very skeptical, right? Secondly, never share your private keys or passwords with anyone. Legitimate companies will never ask for them, because those are for you. Right. And then lastly, stick to well-known regulated platforms and be cautious of unsolicited messages that seem too good to be true.
Okay.
Yeah.
So like any other asset per se or any other space, the opportunities exist, but there are those risks.
Yes.
Okay, cool. So now, just advice to someone listening to us right now and wants to engage with virtual assets responsibly. I want to do it. Today I learned about the risks and the opportunities. I get so I want to engage with them responsibly. What would you say to me?
Okay. Listen, like, as we said, virtual assets for the most part are exciting and present a lot of opportunities, but we clearly outlined that they are not without their risks, right? So I'd give what I say are some golden rules with regards to interacting with virtual assets. The first one would be do your homework. Never invest in something you don't understand. If you can't explain how it works, don't put your money in it, right? The second one is, I actually tested a bit on this, avoid FOMO, or fear of missing out. Many people rush into bad investments because they think they will get rich fast. Take your time. Hey, Fox urile. Exactly. You don't even understand what Fox is doing. So take your time, educate yourself. The third one is, again, we'll reiterate this one, use licensed platforms. Yeah. If a service is not regulated by NBFIRA, think twice before you using it.
Absolutely.
The last one would be to only invest what you can afford to lose. Crypto is not a lottery ticket. There are risks involved, right? So, and in this particular instance, we're talking about the unbacked, the extremely volatile cryptos and all that. Don't put all your life savings or a Bitcoin because you catch hands.
There's something you wanted to touch on there, Kari. So let's
yes. I think in terms of this volatility. So someone might be wondering, volatility?
Yes.
So there are several factors that really contribute to it. Like I said, for the most part, we're talking about market activity, right? Firstly, there is speculation, right? If a certain public figure, emoji, and a Fox, about Twitter, a particular coin, prices may skyrocket. There was a time a certain Elon Musk tweeted about
was it
Dogecoin?
Dogecoin.
Yes.
I remember that.
And listen, I won't lie. I caught that wave too. I was like, hey, if Elon says it, but it never really led
It didn't go anywhere.
The price, the demand skyrocketed for a little bit, but there was nothing that ended up coming out of it. So things like that. Sometimes it might be aspects of bad news coming out, like maybe a government deciding to ban virtual assets or cryptocurrencies. It could affect that. The second one is supply and demand. So some virtual assets, like the Bitcoin, have limited supply. So Bitcoin, and all we have to go with this is a paper written by a certain Satoshi Nakamura. No one knows who that is. But the paper says only 21 million tokens, Bitcoins, will ever be issued. So what they've added in that aspect is a certain level of scarcity that isn't there with other tokens that basically have unlimited supply, right? So when more people want a token, like people want Bitcoin, the prices rise. But when people start selling it off, it drops. So Bitcoin is seen as the original, and even in terms of value, no other token is close to it. Last I checked, I think it was 89,000 USD per token. The closest would probably be Ether at around maybe 3,000. So you can see that element here, and that supply and demand part. The next one is regulatory news, which is basically what we touched on to say a country announcing a ban on crypto can cause global price swings. Trump, as an example.
Right.
Trump's campaign was centered around crypto. No, we're pro-crypto, we're pro-crypto. It's quite different from what the conversation he was having when he was still a president in his first term.
Absolutely.
So he even launched his own token prior to his inauguration. So things like that, there was a huge rally in terms of the price of crypto, because people felt, you know what, for the longest time the US seemed anti-crypto and all these things,
apprehensive.
But now we have the leader of the first world saying crypto is the way. So people just felt everything is going to now go smoothly, the market and everything.
And it took the price high.
Yeah, and then another Trump coin. There's a certain category that doesn't necessarily fall into the categories we've talked about, and maybe just take a wrap up of this. It's called a meme coin. You know how we have memes, these popular on social media and everything.
Yes.
So a meme coin is essentially a token that has no economic or financial value, presents no economic use. It's just something that's mostly pushed by hype. So you'd have a celebrity issue a token, like in a Trump coin. People bought into it because Nila Trump. There was excitement about his inauguration, but the price went up and then fell low because it's not offering any proper market use that could sustain its value.
So why would I put any investment in it?
Excitement. Like I said, FOMO
Fear of missing out.
Because I remember in a particular exchange when it was issued, or what's the word, when it was listed on a particular exchange,
right,
it listed at $25. By the end of the night it was at like $75. So that's a $50 increase, and when you're now dealing with futures and everything, that's a significant increase. So Linda, I don't lie, it crossed my mind. I was like, okay, someone should have hopped on this, but the reality is at some point it will fall, because the hype and everybody's just like,
and those are some of the reasons why the prices fluctuate so much when it comes to virtual assets.
Those are some of the causes. It's not an exhaustive list of the causes of volatility, but so those are some of them.
Kagiso Mochabaki from NBFIRA, head of the FinTech department, and we were talking virtual assets, everything associated with it, from opportunities to the risks to the scams and everything that you need to know. Educate yourself, make sure. Just for it's stuff that's regulated by NBFIRA that you deal with. Kagiso, how do we contact NBFIRA?
Our line 368-6100. 368-6100. We have a website that has so much information about what NBFIRA does, the licensed entities across the different sectors, and also just notices that we issue. We usually issue them on our website, nbfira.org.bw. We have social media. We have a Facebook account and an Instagram account.
Yeah.
So whatever it is that you might want to learn about in terms of the content we put out on different products and different sectors, you can find that there, as well as reach out to us through UNLA and our other contacts.
Awesome stuff, my brother. Thank you so much. Yeah.
Thank you for having us. It's been nice having this series. I really hope people have at least gotten to a point where they're like, maybe I should learn more. At the least, because like I said, it's one of those things that when they first came out, people thought, hey, I know it's just but did they?
And it's here to
they're
stay.
not going anywhere.
I'm sure, and I'm confident that at least you're consider that we've managed to achieve, my brother.
All right.